In today's video, we'll compare SCHD and VYM, namely the Schwab US Dividend Equity ETF and the Vanguard High Dividend Yield ETF. And we'll answer the question, which one is the best dividend ETF? Both these ETFs provide diversification and good yields and come from reputable companies. So in order to make a good decision, I will analyze and grade 9 different aspects of these ETFs and get to a conclusion based on this. It's going to be really interesting because both ETFs are now at a pretty good entry point because of the loss of the last 6 months. So if you want to make a good investment this year, be sure to not skip any point. And now let's go right to the first aspect, which is the strategy. When it comes to strategy and index tracking, VYM, the Vanguard ETF, tracks the FTSE High Dividend Yield Index, which focuses on stocks of US companies that have paid above average dividends and are expected to pay high dividends in the future, excluding REITs. So as you can see, strong focus on high dividend yield as a selection process. The weight of each company in the portfolio of VYM is determined by its market cap. So the higher the market capitalization of a company, the higher the percentage of the stock will be in the ETF. SCHD, on the other hand, tracks the Dow Jones US Dividend 100 Index. And the goal of this ETF is to find quality, sustainable dividend yielding companies. So there is not only a research of high dividend yielding companies, but also a higher focus on the value of the companies. Companies are chosen if they have 10 consecutive years of dividend payments, a high market capitalization, high dividend growth over the past 5 years, high free cash flow to total debt, high return on equity, and expected forward yield. A lot of important factors are used to find and select value companies that are able to deliver stable and high dividends in the long term. So I find the strategy of SCHD to be much more sophisticated than VYM, and for this reason I'm going to give 6 points to VYM and 9 points to SCHD. The second aspect we are going to look into is passivity. One of the important aspects that makes an ETF more successful compared to stock picking or to actively managed funds is the fact that you don't have to actively select, buy and sell the stocks included in the ETF. And this is valid both for you and for whatever asset manager company owns the ETF. VYM tracks the FTSE High Dividend Yield Index using a so-called full replication technique. This means that the ETF is entirely passive and management has no possibility to act even if they were to find a mispricing or investment opportunity. SCHD instead tracks its index in a different way. In fact, according to the prospectus, with SCHD, the management will replicate the index with 90% of the assets, while investing the remaining 10% actively. Now, I know this is a subjective thing, and some of you might consider that 10% actively managed is actually an advantage of SCHD. But since I'm evaluating passivity here as a positive factor, which I believe it is, I'm gonna give 10 to VYM because it's 100% passive and 9 to SCHD because it's 90% passive. So SCHD is still leading with 18 points against 16 of VYM. The third aspect is the expense ratio, and this is going to be pretty quick. VYM has an incredibly low expense ratio of 0.06%, and this is because of the total passivity of the management style. That means that it will cost you $6 per year for every $10,000 you own. The interesting thing is that SCHD, which as we've seen is only 90% passive and can manage up to 10% actively, offers the same expense ratio of 0.06%. Considering this, I'm going to give 8 points to both VYM and SCHD because they both have a great expense ratio, and SCHD leads now with 26 points against 24 of VYM. The next aspect we're going to look into is diversification. VYM contains 466 different companies while SCHD has 104 holdings, giving it more concentration on top companies than VYM. You can see here that the main holdings of SCHD are PepsiCo, American Coke, Coca-Cola, Broadcom, and Home Depot. The highest weight is 4.64%, and the total weight of the top 10 companies is 41.99%. In comparison, VYM, which counts companies like ExxonMobil, Johnson & Johnson, JP Morgan, Procter & Gamble, is more diversified, and the total weight of the top 10 companies is 24.98%. Now, the concentration of SCHD on just 104 companies can be a good thing for people looking for value-based ETFs. This is because you do not have to worry about those other smaller companies included in more diversified ETFs like VYM. On the other hand, a higher diversification protects you in case some of the companies have really bad returns. In terms of assets under management, VYM manages 62 billions, and it does this with more diversification through more than 4 times the number of holdings of SCHD. SCHD, on the other hand, has 45 billions in assets under management. Now, considering the higher diversification of VYM, the lower concentration on the top 10 holdings, and also the higher assets under management, I'm gonna give here 9 to VYM and 6 to SCHD. So now VYM is leading with 33 points against 32 for SCHD. Moving to the aspect number 5, we're gonna analyze the sector exposure of the two ETFs. I put together a table here that shows you the sector breakdown for VYM and SCHD. As for for SCHD, you can see that the exposure to the financial sector has dropped substantially and lies around 13.92%, partly because its financial stocks dropped because of the financial crisis, and partly because some of them have been dropped out of the ETF during the last reconstitution in March 2023. VYM has more exposure to energy than SCHD, as well as utilities, which for VYM takes 7.62%, while for SCHD only 0.28%. Both of these sectors are quite asset intensive, meaning they require a lot of capital in order to operate. This should bring VYM to have a slightly better performance than SCHD in an inflationary environment like the one that we've had in the past few years. But we'll see later how the performance went. Generally speaking, I prefer the sector exposure of SCHD, with a more balanced weighting of the top sectors and also less exposure to the financial sector. For this reason, I'm giving 6 points to VYM and 7 points to SCHD, bringing the two ETFs to the same level with 49 points. Let's now discuss the risks of the ETFs, and we're gonna do this through the so-called Sharpe ratio. For those of you who don't know, the Sharpe ratio is a measure of the risk of an investment adjusted by its performance. And this is done by comparing the return of an investment to that of a risk-free asset, adjusting with the volatility. So why would you use something like this? Imagine that you are comparing investing in a stock with investing in Bitcoin. Bitcoin would probably give you a much higher return than a stock, but brings you also a higher risk and volatility. So in order to compare two investments, weighing not only the potential return but also the potential risk, you use risk-adjusted ratios like the Sharpe ratio. Basically, the greater the portfolio Sharpe ratio is, the better its risk-adjusted performance. I'm not going to go into details on the formula of the Sharpe ratio, don't worry, but I'm only going to show you a comparison that I got from Portfolios Lab. If you check the Sharpe ratio of SCHD and VYM during the last 10 years, you notice that in general, SCHD, the blue line, has had a higher Sharpe ratio overall. This means that in general, explained in a really basic way, it's more worth it investing in SCHD than in VYM with regards to returns and risk. But you can already see that in the last 1 or 2 years, which were really volatile years, VYM had a higher ratio. To see it better, let's select year to date, and you can see that VYM does have in fact a higher ratio. Now, considering that in general, SCHD has shown a higher performance to risk ratio than VYM, I'm gonna give here 6 points to VYM and 7 points to SCHD. That results in 45 total points for VYM and 46 for SCHD. Okay, since we've mentioned volatility in the previous point, let's dig a little bit deeper into it, because when you invest in an ETF, you want it to be less volatile as possible, because the more volatile an investment is, the easier we're going to make emotional mistakes. We are going to use Portfolios Lab again to compare the volatility of the two ETFs, and in particular, we're going to use a graph that shows us the rolling 1-month volatility. Most of the time, VYM and SCHD showed a similar volatility in the last 10 years. But if we dig deeper and we see, for example, the last 5 years, or even year to date, VYM showed a lower volatility than SCHD, meaning that SCHD's price experienced larger fluctuations and is considered to be riskier than VYM based on this measure. Nevertheless, in the last 10 years, the two ETFs were very similar. So I'm going to give 8 points to VYM and 7 points to SCHD, bringing both ETFs to a total value of 53 points. Alright, let's move on now to the aspect number 8, which is performance. Despite dividends being the main feature of both ETFs, capital appreciation is always much welcome. In fact, when I evaluate an ETF, I don't just look at the dividend yield or the return, but I look at the total return, which is the return given by capital appreciation plus dividend reinvested. And I do this because I think that as long as you're not retired, you should pump as much money as possible into your investments in order to profit more from the compounding effect of the returns. So using seekingalpha.com, which is one of my favorite websites for investing analysis, I compared the performance of VYM and SCHD in the last 10 years. Now, in terms of total return, over a 10-year period, SCHD has significantly outperformed VYM, returning 183.80% against 144.85% of VYM. The result doesn't change when comparing the last 5 years, where SCHD returned an amazing 68.71% compared to 43.59% of VYM. Only if we compare the last 12 months, we see that VYM has shown more stability thanks to its diversification, by gaining 1.59% against a loss of 3.08% of SCHD. One of the reasons why in the last couple of years the performance of VYM has improved is that, as I mentioned before, VYM has more exposure into asset-heavy businesses like energy or utilities. So, in theory, it should do better in a high inflationary environment, just like the one that we've had in the last 2 years. However, despite the elevated inflation, VYM was not really able to outperform in the last 3 years, but instead they barely matched the returns of SCHD. And now that inflation appears to be cooling off, this theoretical advantage of VYM will likely fade away and SCHD will most likely increase their return against VYM in the future. So for this reason, since SCHD has such a great performance that it's basically like the S&P 500, I'm gonna give 10 points to SCHD and 8 points to VYM, bringing SCHD to pole position with 63 points against 61 of VYM. But now let's move on to the final, probably most important aspect of the dividend ETF. The dividend yield. Both SCHD and VYM have above average dividend yields for the investors, so the truth is, you can't do anything wrong with any of them. But let's see it closely. The two ETFs are identical in terms of frequency of dividend payments because in both cases you're gonna get quarterly distributions, so 4 payments per year. In terms of trailing 12 months yield, SCHD is definitely the winner with 3.74% compared to 3.90% for VYM. But if we look at the average of the last 4 years, VYM improves a lot and gets extremely close to SCHD. Now, when it comes to the consistency of the dividend growth, while VYM has a slightly longer track record of consecutive distributions increases with 12 years against 10 of SCHD, the 3 and 5 year dividend growth of SCHD is way superior than the rate of VYM. So when it comes purely to the dividend profile, SCHD is a superior ETF. To give you an idea of what is the real difference between receiving 3.74% dividends like with SCHD or 3.19% like VYM, if you wanted to earn $1,000 per month in pure dividends owning only SCHD or VYM, you would need a portfolio of $320,856 of SCHD or $376,176 of VYM. So with VYM, you'd need 17% more portfolio value to receive the same dividends. For this reason, I think it's clear that SCHD wins the dividend race, and I'm gonna give 9 points to SCHD and 7 points to VYM, making SCHD our winner with 72 points. So now you are requested. We'd love to know if you prefer SCHD or VYM. So let us know in the comment section below if you possess any of them and which one you prefer. If you enjoyed this video, you can help my channel with a beautiful like to this video, and of course don't forget to subscribe to my channel for more videos like this. If you missed it, check out this video of mine where I draw the list of the best dividend ETFs overall, or this video where I analyze SCHD. I'm gonna link both of them in the description below. Thank you so much for watching this video, guys. I wish you a great day or evening, and as always, I'll see you in the next video. Ciao!